Hello, everybody. So Transmedics is down 31% as I record this video. Transmedics is, of course, the FDA-approved Organ Care System stock. They have this machine that is revolutionizing organ transplant. Organ transplant used to be done via dry ice and ice mechanisms, and this machine improves all of the outcomes of transplantation whenever you have a situation with an organ donor and a transplant that needs to happen. And this product has had much success and a lot of positive outcomes. And of course, they had to expand and become an airline in order to deal with the specifics of organ transplant, the issues of matching a donor and matching a receiver. They often don't live in the same cities, don't live in the same part of the US. It's pretty complex, and you need an airline in order to move those organs, because you can't move an organ in a commercial plane. That is something that only happens in movies. It doesn't happen in real life. And so they've unlocked more growth potential beyond their machine, beyond their organ sustainment machine. They've unlocked that growth by growing into an airline. And we'll see this is key. The airline, I think, is the leading reason as to why the margins are down, which Wall Street cares about. I don't care about it too much as long as they're EBITDA profitable, which they are. TMDX is EBITDA profitable, so I'm good, but I know Wall Street is going to care about that. That's because they had maintenance, scheduled and unscheduled maintenance on planes. That's point number one. What I care about, though, is revenue growth. And the revenue growth has slowed down. And as you know, I'm a long-term holder. I care about long-term guidance, long-term opportunity, and I care first and foremost about top-line growth. I'm a top-line growth snob. That's what I want. That's what I care about. My style of investing, if you remember the early days of the channel, is this: get in early at signs of adoption in revenue, via revenue. Revenue growth is a proxy for that adoption, and you can see it here, right? You see the adoption in the revenue, and get out at signs of a slowdown. Now, these are quarterly numbers, and the CEO is very clear that he thinks the Q4 is going to be a blowout quarter, and that we're going to catch up in Q4. So let's get into the metrics. The key question is this for me. My question is, why did the revenue drop by a little over $10 million? Why did the revenue drop by a little over 10% in Q3 of 2024? Well, the CEO denied on multiple occasions losing any market share, saying that it's the organ volumes that are down across the US. The organ transplant numbers are down across the US in Q3, and therefore their numbers reflect the fluctuations in the volume. And the CEO says they don't know why there is a slowdown. They don't know why, and it could be a slow summer season. Perhaps there was a slow summer driving season. That could be one of the factors. I believe another factor could be if you follow that field, there's been a lot of rumors. I don't want to say rumors, but chatter. There's been a lot of chatter about issues that are unrelated to Transmedics, not what they do, but there's a controversial practice of keeping certain donors alive just to save the organ. That has been trending. So I don't know if many families have heard of these trends, these controversial issues, and therefore they may, when that happens, they may say, "Oh, no, we don't want you to do that," even though that's a decision that you make before an accident would happen. So I don't know either. I guess is the point. I don't know either why organ transplants are down in these few summer months. But the CEO notes on the call that it's back. He said it's back as of late of October. He notes it's back. The demand is back the way it was, which is why they have kept their guidance for the year. They have not changed their guidance for the year. So the CEO is very clear that it's back. And so the question is, what is this going to be a slowdown? If you listen to the call, a few questions were, well, is this going to be a cyclical industry? Well, maybe the bigger they get, maybe they are going to be more cyclical depending on organs and how many organs get transplanted, and you obviously don't really have any impact. Now, the other problem, and I think this is why the revenue didn't grow in spite of the slowdown, because you would have wanted the revenue to still grow in spite of the slowdown in transplants. I think that one of the reasons why the revenue didn't grow in spite of a slowdown is, of course, we already discussed the margins are down because of the maintenance. So not only do you have to pay for planes, you have to pay to maintain planes that are not flying, so that's going to hurt your gross margin. But also you have missing planes for their NOP programs. They only had 10 planes instead of 18 available. So these missing planes, that means you're going to miss some transplants. You're not going to be able to take on as much business because you have missing planes. And you may say, oh, well, they can just use third-party planes and contract those out. But if you follow this company for a while, you know the reason why they started their own airline in the first place is because these third-party planes are not always available. It's not like you can, get your hand on a third-party plane at 4 a.m. in the morning on a football weekend, right? It's not that easy to get a last-minute plane. And of course, the nature of organ transplant makes it that it's obviously last-minute, right, when you get a plane. So transplants actually may have not happened partially, and maybe the numbers, I would argue, maybe they have been down in the US, maybe for the very reason that they only had 10 planes available, and they are one of the leading providers, and so who knows what happens at the other providers. We don't know why, but I think it's temporary. Let me look at the highlights of the call. So, like I said, we've seen the dynamic normalize early October. They're reiterating guidance. They're going to have their planes back, but they didn't have the planes. They want 16, 18, 19, or 20 planes available, and they may be buying one or two more planes. They want to have their 20 planes coming in Q4, in Q1, and they're back, right? They're back. They only had 10 planes in Q3. Now the maintenance is back, provided there's no more unscheduled maintenance. They maintain the long-term guidance. This is what I care the most about, right? We're not fully mature yet. Read this. We're not fully mature yet. We're standing by our commitment to achieving 10,000 transplants by 2028. I made a whole video a while back about what that would mean for the stock when it was trading at a much higher price than it is today. So if they achieve that, I think this is going to be a great performer. And the short-term guidance was maintained too, which should reassure Wall Street. But obviously it didn't. I also wonder, if a lot of that drop may be due to the fact that there was a lot of options bets that were placed around these earnings. A lot of the options chain was pretty active around these earnings. So that could be a reason why the drop was so amplified. And now we are seeing a down 31% growth. So when I look at the numbers for revenue growth, I have 84% there. I'm using that number because they said they kept the guidance. But of course, the key question in all of my analysis is what's the revenue growth going to be? And there's always a few of you in the comment section that are quick to point out that I'm too optimistic maybe with my revenue growth. And guess what? I'm optimistic with my revenue growth metrics across the board. I'm optimistic always on every stock I cover, which means that if you think I'm too optimistic, maybe every time you see my numbers, maybe you reduce them by 20% or 30% or 15% because I'm optimistic across the board. But I don't think I'm optimistic. I think I'm realistic because the opportunities that this company has are tremendous. They've reiterated the guidance, they've kept the guidance, and I also think that it doesn't really matter too much. And I see people saying, oh, this company is so expensive. I don't know what metric they look at, probably PE. Not gonna get onto that tangent, but if I look at my favorite metrics, say enterprise value over forward revenue, I get a 4 to a 5 because we are still predicted to grow tremendously. And you can see I give you options on my line 2 and line 3 here. I'm assuming the middle one is 60% revenue growth, I'm assuming, and 50% revenue growth, which would be very low for that stock. And it doesn't matter how you put it. you still get an enterprise value over gross profit or revenue growth. How much am I paying? How much am I paying for each percentage point of future growth? I still get something so cheap, at least in the very first quartile, maybe in the first, top 20, I guess. Out of all of the 150 stocks that I analyze, you're at least at the top 20 at a 0.15. You're extremely cheap here. And the rule of 40 is exceeded no matter, even if you say they're only going to grow 50%, which they guided so much higher than that, but even if you say they're only going to grow 50%, you're still getting at a rule of 62. So I find the drop entirely unwarranted. I know some of my viewers like to be reassured about dilution. Looks like recently the dilution was 6%, roughly between 6 and 10% year-over-year dilution. To me, that's absolutely not a problem, right? I named the channel Beat the Denominator because the denominator is getting diluted at 15%. So the company is diluting its shares slower than we're diluting the US dollar. So to me, dilution is not a problem. And I'll conclude with this, with a big picture. The big picture for me is they are still committed to 10,000 transplants by 2028, which is what I care about the most. I'm a long-term investor. I'm not going to trade this. And I don't trade any stock, really. They did 1,000. This is the CEO speaking. They did 1,000 transplants in 2022. 2,300 transplants last year. This year, they're on track to do between 3,500 and 4,000. And again, they don't control this. It depends on how many donors become available. So they see a path to the 10,000 transplants based on their trajectory. And the CEO complains about the fact that Wall Street is only focused on the current opportunity, which is liver transplants, which is where there's a little bit of competition, which is where, some people say, oh, well, it's cheaper to do dry ice. So anyways, I'm still trying to wrap my head around this medical field where it's all about the cost and not about the outcomes. Still trying to wrap my head around that. But anyways, it's like, at the end of the day, there's many people that, need the organs. And so if you're using an old tech, that is much more likely to lead to an unsuccessful organ transplant. Well, that may be a death sentence for someone out there. Anyways, that's that field for you. But they're focused on the opportunity in other organs, which has been a theme of this conference call. It's been a theme of this company for a while, but the market focuses on liver. That's what they like. They like to focus on liver. They don't focus on heart transplants and lung transplant. And you can see, so this is the organ donors right here, the number of donors. And you can see that when it comes to liver, well, there's still a big opportunity in liver, right? Because liver is the most transplanted organ, but you still have an opportunity to roughly double liver. But then look at lung and look at heart. You have an opportunity to 7x, and an opportunity to maybe between 5 and 7x for your heart transplant and your lung transplant. And keep in mind, the big question is, donors in the future, is this going to stay stable? Is this going to go up? Well, this all depends on how many people decide to become organ donors. And the last, I would argue, few decades, we see these ads. Many states, for example, at the DMV, they ask you, do you want to be an organ donor? There's a lot of public policy trying to get more people to sign up to become organ donors and have that written on their ID, right? And we'll have to see this. These are very, very, very macro trends. The direction of how many donors there are going to be. The demand is always going to be there. The demand is there. There's much more demand than there is donations. That's why those donations are so precious that you shouldn't be using. That's just me, but of course I'm biased. I'm a shareholder of Transmedics, but using the cheaper technology if you increase the chances by a lot of losing the organs, why do we keep sticking to the old tech? But anyways, that's just the way it works. It just I just can't stop being reminded of QuantaFlo. If you know this channel, I've covered Semler Scientific, QuantaFlo. They have a better system, better product to detect early heart disease, but Medicare said we don't cover that anymore, and so I'm like, okay, well, doesn't matter. That's why HIMSS, that's why I love HIMSS so much on this channel. We don't have as much problem with that in HIMSS because HIMSS is fully consumer, customer driven, and it's not being limited by insurance considerations. Anyways, they have a long-term strategy. They're going to present their next gen OCS system, this organ care system. The next gen, they'll present it at 2025 transplant conferences. The CEO is excited about that. These are their near-term goals, not only expanding the airline, which is what the market seems to think focus the most about, but there's other goals in lung and in heart, and enhancing the organ care system, FDA-approved machine, enhancing it for heart and lung so that we see more heart transplants and lung transplants. That is their opportunity. That is what they're focusing on. That is also what I'm looking at beyond just the expansion, right? I don't want them to just expand liver. I want them to get into these new organs. The CEO also mentioned that there could be more organs coming. And so I don't know which ones, but there could be more organs coming, but they're going to coming up with this company as optionality in the organ transplant sector. And their long-term goal, of course, we already discussed next generation organ care system, right? This machine, the next generation of that, but it's outside US and Europe, and they talk about that in the call. Outside US program, creating a program outside the US that will be a long-term opportunity within probably the European Union, I'm thinking. That's the opportunity they're looking at. But for that, they need to work on reimbursement first and foremost. So outside US reimbursement also could mean an outside US national or European program. And so, and by the way, when I look at the Transmedics device here, I want to point out that in this device, though, they have competition in Europe. There's a UK company that's working on one of those. And I guess that wouldn't be the European Union. So, well, forget about that point. Anyways, forget about that point. European Union might still be an opportunity for them. So I'm excited. I'm excited about them. I'm gonna look into buying the stock. I don't know if it will be today or if it will be later. Anyway, I post those on Patreon, so you'll know. 31%. I don't know how much more it's gonna go down. It could. I have no idea. Short term. Long term, I'm very bullish on the stock. So no investment advice, no financial advice, just entertainment as always on this channel. Please like, please subscribe. Thank you for watching and have a wonderful day.